Peter Eliades with you, Stock Market Cycles Update for Wednesday, April 1st. Now we can play April Fool's jokes with each other. There are no jokes here, folks. This is pretty exciting what's going on. First of all, a couple of comments. First of all, some of the remarks below, and thank you very much for those of you that are leaving remarks below. I appreciate them. For the most part, they're very complimentary. That's very nice. There are some critics there, some criticisms. That's to be expected, as long as you give a legitimate reason why there's a criticism. That's fine. But some of the commentary mentions fundamentals, coronavirus. Let me make something very clear about price projections. They don't give a damn about anything that's happening in the news, because the theory is that everything is built into the market. Everything that you and I and everyone else knows fundamentally is built into day-to-day market prices. So I think we all know what a horrible, horrible thing the coronavirus has been and will probably continue to be. Perhaps longer than we imagine now. I don't know. But do not reach market decisions based on news. It's a losing proposition. I promise you that. So just be assured that everything that's known in the real world is built into market prices. And so to say that we can't go up from here because the virus is so bad and it's spreading so quickly is ignoring the whole theory of what I'm trying to bring forward here, and that is that the market moves in cycles. That much having been said, my little lecture for the day, this is the S&P cash, and things are unfolding, I won't say perfectly and exactly as imagined, but pretty damn close, okay? So, look what happened today. We had a downside move today. It doesn't look like a big move on the chart here because of the volatility lately. It was a huge move. The S&P was down over 100 points. Over 4% the S&P was down. And again, doesn't look that big here, but the important thing is what? The important thing is it gave and met a very short-term downside projection. These are offsets of 3.5 to 4 days, exact offsets thanks to Stefan Sherman's fabulous software. This red line is actually 3.5 spaces forward from this right here. This would be 1, 2, 3.5, okay? And they crossed here. So it's telling you that between this crossing and this crossing, these are the two projections. This is the range of the downside projections. Came exactly into the projection window today. So now, as we always do, we go to the next longer offset. The next longer offset is this one right here. Now, this gets to be important, folks. Okay, again, I will remind you, this projection was given last Thursday. It's Thursday, Friday, Monday, Tuesday, Wednesday. We theorized at the time, because we did not see the market getting way up here again, that in order to avoid giving a projection way up there, we'd have to go sideways to down over the next several days. And look what we did. This is a really important down move, because now it sets up. And remember, this projection is very much in effect. And even tomorrow, that a very sharp decline will not invalidate the upside projections unless you go below this low that we saw on March 23rd. Not likely tomorrow, okay? So we've met a projection. We have not given further downside projections. We've come down from here. And now let's look at the next longer offset. The next longer offset, and this is where things get interesting, okay? So I'm going to ask you to use your observational powers for a little bit here. The midpoint of this is today's bar right here, okay? Now, and these are the two offsets for a nominal 5-week projection, 12.1 and 13.8. These are the simplified versions, not the Stefan programmer versions. These are 12 and 14 offset days, but they serve their purpose here. Imagine moving the red line forward little by little by little till it reaches the blue line. That would comprise a continuum of prices from here going right to there. And it's that continuum that is the important one for giving projections. So now, imagine this red line coming forward just a little bit, and imagine this bar here, the midpoint being right there, turns up from here. Well, as you can see, we can place where my cursor is right here. We can place it anywhere to give a tentative projection for where we are now. If you move the red bar forward maybe like a half a space and we rally from there, then the rally would occur somewhere around here and we would get an equivalent projection. The red line would be the current new projection that would be generated by this 12.1 to 13.8 day offset. I know this sounds complicated, but I think a lot of you are beginning to absorb the theory behind what's going on here, and you can see what I'm talking about. So now, as we theorized back on Thursday of last week, we had this downside move, and we can get an upside projection on a rally from here right back to the same level as this shorter-term projection right here. And that's kind of what we're looking for here. The only way that we can invalidate this projection over the next few days is to go to new lows below the March 23rd low, okay? So now, it's also important to look at the next longer offset. And what we've done here is placed this offset line, we've placed the rectangle that gives what the projection already is and which could be affirmed by another projection given to around the same level. And look how many days we have. We've showed you this for several days now. Today's Wednesday, Thursday, Friday, Monday, Tuesday, Wednesday, Thursday, Friday. Monday, Tuesday, Wednesday, Thursday, Friday. Almost 2.5 weeks before, if we reached this area, we would begin to think about getting even higher projections, and those would be like almost back to the old highs. I don't think that's going to happen. And if it's not going to happen, then we have a pretty good idea what's going on in here and what to look for. So here is our target up here. We think that target may be confirmed. For those of you that do Elliott Wave, you can either count a 1, 2, 3, 4, 5 down to here, or a 1, 2, 3 down to here. So we would either be in doing an ABC from 5 waves down, or we'd be doing a 4th wave from 3 waves down. I am not an Elliott expert, so please don't tell me where I'm right or wrong with Elliott interpretations. Speaking of which, one of my best friends in the business is Bob Prechter. Bob is a brilliant, brilliant analyst. He and I both have taken a lot of heat over the years because I think we've garnered the reputation of being perma-bears. Nothing could be further from the truth because no one was more bullish than Bob and I were back in the early 80s going into the 90s. But Bob wrote a book several years ago called, the book was about the upcoming crash. And he has redone almost a complete book. It's kind of rewritten and updated the whole book. And I would very, very much give a recommendation to you to go to their website at ElliotWaveTheory.com and look at Bob's new book, because if you're as long-term bearish as we are, he's got some fabulous advice there in terms of what to look for and perhaps even for a lot of you what to do with your money. So that's my little plug for Bob's book, and it's well-deserved, and I think you will be very happy if you look into it. Okay, further down the road, you know what? I was going to show you the closing price projections too, but they end up being exactly the same as what we looked at here. We met closing price projections here, nominal 10-day projections to the downside. That's an offset of 3.5 to 4 days on both a closing basis and an intraday basis today, and gave no further projections. The suggestion from that is that we rally from here, okay? Now, as you can see overnight, the futures crawling up above us here are up 22, 23 points. Well, I didn't need to see the crawl to tell you what the results of the projections are down here. And they're saying that we're going to rally from here and perhaps surprise a lot of people with the extent of the rally, because as we already have projections up here, and they could be affirmed or confirmed by newer projections in the next couple of days. So that's what we're looking for. I'm going to end up today's update by looking at the NDX, so bear with me for a moment until I switch to those charts. Okay, we're back with the NDX chart now. Remember, we've showed you this chart now for a few weeks, significantly lower projections, and they remain in effect. Came close to getting invalidated, at least temporarily for a day or two, but that has not happened, at least not yet. So what are we looking for from here? Well, as you know, we're looking for higher prices. So the question becomes, are we going to get high enough here to invalidate these much lower projections? We don't know that. We have to watch and see what happens with prices over the next several days. Ideally, we get back into this area right here, just below the offsets, and these projections remain in effect. When I say ideally, I'm not suggesting that I want something like this to happen. I'm saying on an analysis basis that this is the thing that would make sense if we do not invalidate the projections and we have significantly lower projections. So these are, let's take a look at the length of these offsets. These are 96.8. I think yesterday I said 98.6. The offsets for nominal 40-week projections are, on trading day basis, 96.8 to 110.6. And that's what these offsets are. And this is the projection they give. 53.85 rounded off, 61.67 rounded off. How about the next longer projections, which are the nominal 78 to 80? Well, those are interesting because, okay, given, confirmed down here, called into question a little bit, still confirmed right here in the rally of the last week or two, completely invalidated right here, okay, above both the lines, but then back below both the lines, then above both the lines. I think I suggested within the last week or two that something like this would happen, above, below, above, below. Today, we're not only below both the lines, but we're below any possible 189 to 194 day offset. Again, if you think of that continuum I talked about, the red line is the 189-day offset. If you start moving that over a day at a time till you get to 194, this is below any point in between the 189 and the 194. And it's giving a projection significantly lower, somewhere around this area down here, 5308, 5309. So this one is still called into question, but the shorter one, the nominal 40-week projection, is very much in effect. So look at this projection here and then go to the longest offset of all, which are the nominal 4-year and nominal 8-year offsets that we recently added on. And you're looking at something like this. This is a projection that is now in effect and confirmed. If we get down here, we're going to break below these offsets right here. And that's, that's almost unspeakable in terms of what the downside projections will be. So I want you to be aware of what we're looking at here. These are the possibilities that could come about in the next few weeks. In the meantime, because of the cycles and the projections, the suggestion is pretty strong that we will get rallies from here and probably meet the projections that we've given you. And that's where we stand as of the close on Wednesday, April 1st. And there's no April Fool about that. That's for real. And I hope you're getting the feeling that this is the way the market works. Because it's fabulous to watch the cycles unfold and the cycle projections day to day. Watch them unfold and how you're given information each day as to what the next logical move, I shouldn't say logical, what the next potential move is in the marketplace. That's it for now. Thanks for watching. Haven't subscribed yet? Subscribe, bottom right of the screen. Click on the notification bell. You'll be notified of all the updates that we do. Thanks for watching.